Hello and welcome to Halftime Report. I am Anuj and with me is Sonia. Hi Sonia, good afternoon.
Hi, good afternoon. And it's a good day, right? I mean, that word comes back to my mind, decoupling, because India has sort of branched out from its global peers. Of course, the US markets are not trading later today for Labor Day, but for our own markets, it's rock solid.
Yes, and look, at the end of the day, outperformance is there. Whether decoupling happens or not, I think we'll need to give some more evidence for that, Sonia. But clearly, there's outperformance. And for our market, there's clearly this texture of buying every dip. Today, the market didn't even give dip. Today, it was hardly a dip. In fact, the market opened higher and ever since has been moving up. I think just keep an eye on the advanced decline because that's been strong. That's where the first indicators normally come from. But the Indian market has momentum. And unless, you start to see complete sort of collapse in the global market, my sense is this outperformance perhaps could extend for a bit.
Oh, absolutely. And the theme is the same, right, Anuj? There's autos, consumption, travel. I mean, stocks like TVS Motor, Indian Hotels continue to hit new highs this afternoon. And guess what? Some laggards are also coming back. Metals are coming back today. So that speaks about the momentum.
Yeah, I think the laggards are coming back. The top two gainers, for example, now are Exide and Amara Raja, right? Yeah. Something which have not done well at all. PVR is making a bit of a comeback, by the way. There's a bit of a sense that perhaps Brahmastra changes things a bit compared to what's been happening on the movie industry. So that's doing well. And of course, a lot of individual names, financials in general, have been outperforming, and that continues to be the case even right now as well.
Okay, since you said financials, I'm going to take the cue from there. Emami Financial is the top F&O gainer today on the back of its August business update, which looked pretty strong. Abhishek is here with all the details. Abhishek.
Well, Sonia, as you mentioned, MMFSL has given that monthly business momentum wherein the disbursements have come in at 3,740 crores, which is up 75% YOY, but is down about 4.5% on a month-on-month basis. So over the last 3 months, if you see, that disbursements run rate per month has been more than 3,700 crores. So YTD disbursements are at 17,150 crores, which is up 104% YOY. The collection efficiency remains strong at 96% in the month of August when compared to 97% in the previous month. So collection efficiency has been at 95% or above in the last 4 months. So stage 2 overdues or loans which are overdue for more than 60 days but less than 90 days, that has improved on a month-on-month basis, while stage 3 or the gross NPA ratio remains stable as per their exchange filing. So they say that they expect both the stage 2 and stage 3 asset quality to improve in the month of September. Back to you.
Okay, Abhishek, thanks for that. So from the top gainers, let's move to some losers. Diagnostic companies are in focus. Nimesh had alerted us this morning about a brokerage note. Nimesh, let's just revisit that.
Sure. So, Anuj, both the stocks are under pressure today after Antique put out a note and they have a sell rating on both the two stocks which are in the F&O, both Dr. Lal PathLabs and Metropolis. On Dr. Lal PathLabs, they have a target price of 1643, a potential 30% discount, 30% fall from current levels. And on Metropolis, they have a target price of 1232, again a 10 to 12% downside from current levels. Now, the key reason for the downgrade: one, there is increased competition, and B, the COVID-led tailwind are now behind. So, for the entire sector, there is a scenario of a lower CAGR. In fact, Antique believes that the margins that these companies reported in FY21 will not get repeated anytime soon and will revert to long-term revenue averages of 10 to 12% versus the over 15% plus that these companies reported in the last few years. Even on return on capital employed, it should stable around 25-26% versus the earlier pre-pandemic levels of over 33% reported by this company. So the entire sector is likely to see a valuation derating, and hence Antique has put out a sell note both on Metropolis as well as on Dr. Lal PathLabs.
Okay. In any case, these companies have been going through a lot of pressure, right? Competition has been on the rise. But Nimesh, another big downgrade coming in from Credit Suisse on ABB. Tell us about that, considering, ABB has been one of the best performing stocks this year.
In fact, that's been a key reason, Sonia, for Credit Suisse to downgrade the stock to underperform now from neutral, and they've retained a target price of 2600. Now, the key reason is, one, as you rightly also pointed out, that has been a big move in this stock. The stock is up over 76% in this year. And not only for the year, if you look at for the last 3 to 6 months, the stock has rallied between 30 to 50%. So, and has been a big outperformer compared to the other capital goods stocks in that space. Well, Credit Suisse do believe, and they do see a revival in the investment cycle. After this big move in ABB, now the stock is trading over 70 times FY24 price to earnings and is penciling in more and is anticipating very high expectations from the street. Now, even on DCF model, it seems to imply a 20% CAGR for the next 20 years and at an all-time high margins of 12.5%. So on back of this, on elevated valuations, they've downgraded ABB. They have a few picks in the capital goods space. So Credit Suisse maintains an overweight on L&T, and they prefer Siemens over ABB purely from a valuation point of view. But the ABB downgrade today is largely on back of elevated valuations and the fact that the stock has been a rank outperformer and up 76% in the last 1 year.
Nimesh, thanks a lot for that. Reliance